The room is silent, but the pressure is deafening. A young engineer sits at his desk at 2:17 a.m. He is staring at a banking app that shows a negative balance. Messages from loan apps flood his phone. Minimum due, overdue, penalty applied. His salary came in just 3 days ago, and it's already gone. Not on luxury, not on reckless bets, but on EMIs, subscriptions, and debts that quietly stacked up over time. This isn't a story about saving money. It's an investigation into the architecture of financial stress itself, how it is created and why it spreads. Financial problems are not accidents. They are engineered outcomes, and understanding that mechanism is the only way out. At its core, the modern financial system is built on one powerful promise: access. Access to money instantly. Credit cards, personal loans, BNPL schemes. Buy now, pay later. What was once restricted to the elite is now available to everyone. Credit exists to smooth out life's uneven cash flows. If you need money today but will earn tomorrow, credit bridges that gap. Think of it like borrowing time. Instead of waiting, you bring that future purchasing power into the present. But the system carries an assumption that future income will always be stable and sufficient. This is where everything begins to crack. Once you take on debt, time starts working against you. Interest compounds. Deadlines harden. Imagine you earn $50,000 per month. You commit $20,000 to fixed expenses. That leaves $30,000 for your life. Now introduce debt. A $10,000 EMI, then another $5,000. Add subscriptions and lifestyle upgrades. Your free cash flow shrinks. Your expenses are no longer flexible. They are locked. You have converted your future income into pre-assigned obligations. The system doesn't collapse overnight. It evolves. At first, everything feels manageable. You pay your EMIs on time. Then comes the propagation phase. A small emergency, a medical bill, a delayed salary. You dip into savings, or worse, more credit. More debt means more fixed outflows. More fixed outflows reduce flexibility. This is a self-reinforcing cycle. The system scales this behavior. Banks incentivize borrowing. Apps simplify it. Social pressure normalizes it. Ownership is replaced by access. Savings are replaced by EMIs. Patience is replaced by immediacy. But beneath this convenience lies a hidden flaw. Financial shocks do not hit everyone equally, but debt obligations remain constant. Eventually, something triggers it. One missed payment. A single disruption breaks the illusion of control. Penalties kick in. Interest rates rise. Credit scores drop. Now, the system flips. Borrowing becomes expensive. To see the full mechanism, imagine drawing it. Income enters. Expenses flow out. Debt creates fixed channels. Money must pass through. If inflow fluctuates but outflows remain fixed, pressure builds. When pressure exceeds capacity, the system fails. This is not personal failure. It is structural imbalance. Freedom is replaced by obligation. Control is replaced by dependency. But the same mechanism that creates problems also reveals how to eliminate them. The solution is restructuring the system. First, reduce fixed obligations. Every EMI you remove increases flexibility. Every subscription you cut restores control. Second, rebuild liquidity. Savings are shock absorbers. They allow your system to handle uncertainty without collapsing. Third, break the feedback loop. Stop using credit to solve problems created by credit. Fourth, increase income strategically. More income without structural change only accelerates the cycle. Finally, shift your mindset from consumption to ownership. Ownership creates stability. Consumption creates dependency. When you see headlines about rising consumer debt, understand this. It's not a coincidence. It's a pattern. That engineer at 2:17 a.m., he isn't irresponsible. He's operating inside a system that rewards short-term access. The moment he understands the structure, the flows, the loops, the system changes, not externally, but internally. Financial freedom isn't about escaping the system. It's about understanding its architecture well enough to stop being controlled by it.